begin live on YouTube. And I've sent my messages. I'm a couple of minutes late, I guess, but not really. It's live on YouTube at the right time. If you can hear me, guys, just let me know and we'll begin the show that we deserve. Yes, we deserve it. The show we deserve. The best thing ever. A thing that makes everything better. The morning good luck charm. You know, the setup of the perfect tone for the day. If you can hear me, just give me a shout and we'll begin. On YouTube and on LinkedIn, guys, if you can hear me, just let me know. And then we will start the show that we deserve. Right? Right? Right. Correcto. Okay, I'm audible on LinkedIn. And I am audible on YouTube as well. So we will begin the show that we deserve. Keep your comments rolling. Bum bum bum. Bum 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 bum. Bum 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 bum. Hello everybody. Welcome to Thinker's Frequency. We're having such a good time. This is the peak of human civilization. We're working so hard, doing such good work for ourselves, our parents, our kids, our siblings, our husbands, our wives, our friends, well, everybody. Well, not other people's husbands and wives, I hope. Just when we thought things couldn't get any better, like they couldn't possibly get any better, well, they just did. Call it divine intervention, folks, but things just got a whole lot better. Now we have Thinker's Frequency, our daily mental workout, our daily dose of insights and analysis, which don't lead to paralysis, right before we punch in. So let's continue with our journey of reading between the lines, things that are especially interesting and important in the world of business and finance. Let's go! Oh, but before we go, we've got to follow tradition, right? You know the tradition. The sweet and sacred tradition of the simultaneous sip. We'll all sip something together and it'll bring us good luck, as it always does. As it always does, by the way. It brings us good luck. And all you need for the simultaneous sip is a cup or mug or glass, a tank, a chalice or stein, a canteen jug or flask or a vessel of any kind. Pour it with your favorite liquid. Today I'm having green tea. And I added some black pepper in it. You know. And here we go. Oh my god, nice. Beautiful. That was healing. Let's do it again. Lovely. Sublime. You know what the simultaneous sip says, right? You know what it says? It says that you're not alone. It says that we're in this together. And that's such a nice thing to say, right? Moving on. Mr. Amrit, thank you so much. QIP March. SBI kicks off a 25,000 crore QIP capital raise. QIP is Qualified Institutional Placement. SBI raising 25,000 crores. This is going to be the biggest raise it has ever done since 2017 when it raised 17,000 crores. Banking sector looking heavy. Ready to lend, ready to move forward. Probably a slowdown in the next few months because of the net interest margin play that we've discussed. Viewers of Thinker's Frequency know about it. But then, you know, we might just be looking at some sort of serious activity as far as the whole banking play is considered. Moving on from that, that's always a good news. If banks are in good shape, you know, you can expect a lot of economic activity. Mini US deal trade deal likely as GM door ajar. GM, that is genetically modified crops, door ajar. It's basically, this is particularly in the limbo. Viewers of Thinker's Frequency would remember The US and India trade deal is hinging on the farm exports deal, right? US is insisting on farm exports. They want to export their farm products to India. India says we can't do that, and India is facing a lot of uh, resistance as far as importing farm products is considered. We talked about dairy, we talked about farm, we know about that. If anybody needs a refresher on that, they can let me know. But at this moment, the situation is that India has opened itself up to the genetically modified livestock feed, but not corn and soybean and so on and so forth, soybeans. So livestock feed is done. That's not a problem. But dairy, corn, soybean, actual human, produce, basically human consumption produce, India is not open to that. However, this is gonna be tough because India is facing two headwinds, or let's say two problems as far as the US trade deal is considered. Number one is the bone of contention due to the Russian oil situation. So India buys a lot of Russian oil, and US is trying to corner Russia, and it doesn't have a lot of options as far as uh, cornering Russia is considered, because Russia has done fine with whatever sanctions US laid on them. So Russia isn't bothered, right? So what can US and NATO do next is basically pressurize their allies. And who are Russian allies right now? The biggest ones are India and China. So if India and China pressurize China, they can't. They're already maxed out at China, right? They're trying their best. Then comes India. India is in a favorable situation. So the most they can do is basically say that you import a lot of Russian oil, so we're gonna get you screwed, right? India doesn't want that. India doesn't want these kinds of impediment in the so-called growth story. However, India needs much, much more favorable norms, or let's say much, much more favorable. Uh, what are those? What should I call them? Terms for the global businesses to be interested in the country. Because let's say if the delta between India and Vietnam is, let's say, 10%, do you think industries would shift to India for 10% or 5% or something of that sort? No, they won't. Because India is a uniquely difficult place to do business, you know, and that needs to be compensated by a lot of interests and, incentives and favorable tariff situations. So India really needs to cut its act together and get it, so that this particular thing doesn't really derail the overall story, right? Speaking of the overall story, uh, government has basically House panel proposal on dividend and IT bill may bring relief to companies. So relief companies were saying that there shouldn't be double taxation as far as dividend income is considered from different companies, because they'll be taxed differently. So basically that proposal is on, and companies are hoping that we'll get some sort of relief. Suggest restoring clause for deduction on intercorporate dividends. So they've suggested a lot of tweaks as far as the whole IT bill is considered. IT is income tax, and let's say what happens there. In again, everything is tied to the ease of doing business. If intercorporate dividends are taxed and then they're taxed again, double taxation, it's going to be a bit of a problem. So they want that going back to normal. Speaking of ease of doing business, Maruti doesn't seem to have a lot of ease of doing business lately. Maruti is going through some tough times. And here's the news. Maruti engines sputter on small car woos. June production volumes at 5-year low over fears of overstocking at dealerships. 5-year low. Production at 5-year low. What does that mean? Maruti's production going at a 5-year low. That is an alarming thing, to say the least, because 5 years is essentially talking about the COVID slump as well, right? So, production at Maruti fell to a 5-year low in June as demand for bread and butter small cars and compact sedans continued to weaken. And 66% of all vehicles are now SUVs. SUV account for the 66% of total sales mix. Basically, the graph goes like this. It's not going up. Now, why? is this not going up, and how do we deal with this has been a long discussion for us. But one thing is clear, that if affordability is an issue and if the lower tier cannot afford cars, something is not clicking with the economy. Something is not, and maybe a lot of moves which have already been made right now, like interest rate reduction and so on and so forth. Maybe all of those need some time to actually kick in, you know. And once they kick in, you might see something happening as far as small car sales are concerned. Because we need the small car sales, the country needs the small car sales to pick up in order to actually, you know, keep itself in a forward momentum kind of a situation. Because you know what happens is, there, if let's say Maruti's stock goes down and it keeps going down, if Hero Motocorp stocks go down, they have a lot of weight on the indexes, right? If the auto companies start going down, the index goes down, and suddenly the sentiment starts turning negative. That something is wrong. Earnings report don't happen. So these kinds of things need to be, and there is no easy fix, right? Uh, like China, what they did was last month, viewers of Thinkers Frequency know that they gave a $2,800 incentive for people to buy cars. That's 2.5 lakh rupee, sort of a discount from government side, right? So does India need that? Should India need that? Should India consider that? Can India do that? Those are questions, and very important questions. Speaking of very important things, indigenous AVACs get a go ahead to be developed by DRDO. 20,000 crore project. 20,000 crores. AVACs are airborne early warning systems. Essentially, what's the full form of AVACs? Is airborne early warning and control systems. So 20,000 crore project to DRDO, very important. As we've discussed at Viewers Thinkers Frequency would know, you know, everything rests on drones and their effectiveness, their, let's say, versatility. This is a step in that direction. Uh, Everything rests on drones. We've had a fabulous discussion on if you remember, like drones are nuclear power without that limiting factor, without that ceiling. So drones, the technology can just keep getting better and keep getting more effective, more efficient, more lethal, more, you know, if it's surveillance tool, more productive, and there's no ceiling to that. And with drones, you develop an entire electronics industry, you develop in the entire manufacturing industry in ways never seen before. So very important that that happens. Moving on, offline KYC without disclosing Aadhaar data. So this was a bone of contention between people. Like companies needed easy access to Aadhaar based authentication, right? Because if Aadhaar based authentication works so well, companies say that we should do it. However, they come with some sort of riders, and many companies were misusing it, using it when it was not needed, and so on and so forth. So, what they're thinking about is using like an offline Aadhaar. So, you don't use your Aadhaar pin or something, but there's some other authentication in the middle of Aadhaar and nothing, right? So, I think it's just overkill. I think it's just overkill. Why don't you basically use Aadhaar? What's the problem? But somehow it has been a problem, and I think it's one of the regulatory overkill problems. Some people say that it's a privacy issue, and in support of that privacy argument, what somebody did on Twitter was they got somebody's Aadhaar card number, and they got a bank account number from that, and then they sent them 2 rupees. So what? So what? You know, send me 2 rupees. It's okay, it's fine, right? I don't mind. But there are arguments, very lengthy arguments, about how safety is a big concern. Uh, Waiting for SEBI response to queries on Vedanta, says Viceroy. So Viceroy, the short seller, which placed a short on Vedanta, and nothing happened. It just turned out to be a damn squib. They're like, we are waiting for SEBI to answer our queries, essentially indicating that SEBI is in on it, because when short sellers place their shorts and go public with it, they expect some brouhaha, and the best step forward is to just blame SEBI, right? That SEBI is in on it. That's what happened with Hindenburg as well. So when nothing happened, when court cases didn't go anywhere, when nothing happened, they said SEBI is involved. Maybe SEBI could have caught it, and so on and so forth. But, just take the loss and move on, man. Fucking loser. I'm sorry. Moving on. Uh, India's Inc. American dream hold as tariff talks drag. So that's in continuation with what I said, right? Because a lot of electronics manufacturers, a lot of electronics suppliers, and a lot of their clients are essentially looking at this trade deal. Yeah, I'm sorry, Mr. Tiwari. I'm sorry. I'm sorry. I hate the short sellers. you know. But yeah, sorry about that. Maybe that censorship discussion got me in on that, right? I apologize. Man, I apologize. Anyway, so India Inc.'s American dream on hold as tariff talks drag. So, as we talked, they really need a clarity on the tariff discussion, and they really need Indian tariffs to be much, much lower than Vietnam and every place else. Because if they don't have that delta, as far as the tariff situation is considered, they might just move out, or they might just slow down, which is gonna be a big, big blow to the Indian story. I was watching an interview with Peter Thiel, of Mr. Peter Thiel, and he basically said that India is an especially messed up place. So there was a conversation about where to look as far as the next economic frontier is considered, and where to essentially think about investing in new startups, or what where do you look if you're looking away from China. So people were trying to nudge him towards India. They said, what about India? What about India? And he just kept coming back to Vietnam. He just kept coming back to other places. He said India is an especially messed up place. And to change that sort of perception, that Babu driven perception, uh, you know, we really need a lot of, first of all, changes in the inside, but at prima facie level, the deal should be good, right? And the deal right now looks a little unsafe because a lot of factors, right? Russian oil, the farm thing, a lot of different situations that are essentially leading to that. I still read your comment, Mr. Tiwari, and I feel sorry. Right? I broke my record. I'm not gonna do it again. Apple harvests record iPhone output from its India orchard. So, $22 billion worth of exports of phones from iPhone in. Mr. Tiwari says how much we may hate that perception still is. It's true to some extent. You're right. You're right. Of course, that is true. That's the problem, right? And a lot of people start comparing India with China. So just yesterday we talked about how India met its renewable energy goals 5 years early. So we had a renewable energy goal of 50% of the overall power capacity by 2030. We got that by 2025, and then people started talking about China. So they also met their goals early. They also did this early. Now they're looking at this. India and China have radically different stories, unfortunately for India, right? So that is almost an unfair comparison, because you're comparing a $4 trillion economy with a 17, $18 trillion economy, the biggest economy in the world adjusting for PPP. And you're looking at an economy which got, when it entered WTO in 2001, Bill Clinton got it done. Now, Bill Clinton got China in WTO, and ever since that happened, in the late 90s, early 2000s, China has been on a roll. And then China got that roll happening because of, you remember what? The zero interest rate policy, right? 2007, 2008, they got zero interest rates. Zero interest rates, a lot of lending happened. A lot of lending, it went into real estate, it went into manufacturing, it went into a lot of capex, and everybody grew, and China grew. So they leapfrogged. Right now, after 10 years of whatever, India has its moments to shine. However, the global economy itself is looking dim, right? So, unfair comparison, but yeah, India is a bit late to the party for whatever reasons. So, but that said, Apple is exporting 22 billion worth of phones in just the first half against 14.7 billion in a year ago. So that is great. And the value addition is 15 to 20%. So viewers of Thinkers Frequency would remember that Mr. Ashwini Vaishnav said that we will be at a value addition of 38% as far as smartphone manufacturing is considered by 2035. Was it right? So 30% till 2030 and 38% till 2035, where will be essentially equal to China as far as electronics manufacturing value addition is considered. Right now that value addition stands at 15-20%, 20 something. That is going to go up to 30% and then 38%. 38% you basically match China in 10 years. Now, does that account for what China will be as far as that growth rate is considered? Would they stick to 38% as far as their value addition play is considered? That is something that probably wasn't accounted for. However, maybe it means that where China is today, we'll be in 2035. So if you look at that, if you read it that way, that China is at 38% right now, we'll be at 38% in 2035. That means 10 years, right? So we're just 10 years behind. Moving on, flip phones have turned out to be a flop. Well, 7 years of share, 7 years of launch, still a very expensive product and not much share in the market. So at this moment, India has flip phones selling at somewhere around 8 lakh units. 8 lakh units. And 8 lakh is less than a million. And Indian total smartphone shipments stands at 150 million. So it's basically 0.5% of the market. So they say it's not an emerging technology anymore. And maybe it's time to accept that flip phones, the expandable smartphones, weren't so hot after all. What do you think about that? What do you think about flip smartphones in general? I always had that weird feeling at the center of it, right? The wedge. It seemed a bit weird. But anyway, moving on. Advent TPG amongst funds in race to buy Hero Corp's chip arm. So Hero Corp is essentially a Suman Kant Munjal group. It's not the Motor Corp, which is the Pawan Kant Munjal group. Suman Kant Hero Electronics is that play. Now they got into this particular company, Tessolve, in 2016. They had acquired Tessolve in 2016, but now they are looking at divesting their share. No, it's basically a chip solutions provider, full stack semiconductor chips provider, chip design, testing, production support, embedded software, and so on and so forth. Now my question is, why are they exiting this particular play? Isn't this supposed to be a very hot thing? Isn't this supposed to be a seriously hot and future play? Why would they be looking at exiting this at this particular juncture? Doesn't make sense to me. They have something, it's growing in value. So when they had bought it, it was basically 2021, it was valued at 100 million. Right now, that company is getting valued at 450 million. So 2021 to 2025, the company has grown like 4 times, more than 4 times, right? Now, my question is, do are they looking at exiting because the returns are great? Because the returns are so awesome, they're exiting. But don't you think it's an early exit for a smartphone, a semiconductor play? I think it is. Maybe the group really needs money, right? Maybe it really needs money. Okay, so this is a continuation to a story that we had discussed. If you remember, viewers of Thinkers Frequency would remember the seat concern, the UAE Emirates seat concern, right? That seats aren't growing. The airline seats, the upper limit to the seats had been crushed long ago, and then the Emirates guys weren't being able to ferry more people through the airlines, and India said no, we're not gonna raise the seats. India and Kuwait have agreed to raise flight seats by 50%. So India and Kuwait have agreed to raise the flight seat capacity by 50%, raised to 18,000 weekly. That means the airfares are gonna get lowered and so on and so forth. Does this mean that the same is gonna happen with the Emirates guys? And if that is true, if that happens, does this mean that their pressure or their requests worked or will work? That's up to be seen. But you see how stories develop. Like these guys, they were requesting that Dubai and Indian seats, we've maxed out. Please raise the seats and so on and so forth. India said no, that's okay. They say no, this was done in 2014. It's been 11 years. We have grown so much. Raise the seats. They said no, Indian Airlines are going to take care of it. They said okay, then we are going to look at other markets. That's how the story developed. And now it's news that seat capacity has exhausted quota sharp airfare increases, because their quotas, airfares go up, and if airfares go up, consumers suffer. And government said okay, let's do it. So maybe something happens as far as the UAE thing is considered. Let's see. Diageo CEO steps down, Jhangiani to lead for now. So now Diageo has been struggling. Diageo is the leading spirits maker of India. They've been struggling, they've been struggling, right? So every alcohol company is struggling essentially, if you look at it that way. In fact, alcohol as a segment is struggling. And we discussed about this. Viewers of Thinkers Frequency would know. What most people don't know actually. Most people get really surprised that, whoa, really, really, really? But we don't get surprised because we've studied it. That alcohol consumption is at a down low, right? Alcohol consumption is not growing. In fact, it's declining in the West. And even in India, it's showing signs of decline. A lot of people have hypothesized the stories behind it. That maybe people are just getting health conscious. And I call BS. I said no, that's not true. It's basically weed and other things and aging population and so on and so forth, right? And now that CEO has stepped down, somebody else will take over. And this makes you feel how much of your professional career is essentially external environments, right? The HUL CEO left. HUL CEO, who had been there for 2 years, had to leave because HUL didn't grow. Indian consumption story was at a down low. Nothing was happening. Nothing was working, right? He tried everything. He tried going the volume way. Nothing worked. And then he had to step down. And then a new lady comes. And what if Indian consumption story suddenly picks up in a few, let's say, quarters, right? Because of the loans and everything. What happens then? This new CEO is going to look good. And people are going to say, no, she really did it, man. She really did it. And how much of it was external environments? So that's an interesting way to think, right? Moving on. Schneider is looking at buying out Temasek in Indian joint venture. Temasek is the Singaporean government-backed fund. Dixon's JV firms the joint venture which we talked about yesterday, if you remember, with two Chinese companies. I'm again gonna try it. So one was Chongqing Yuhai, and the other was Kunshan Qtech. Okay, so that's gonna face government scrutiny because government wants to be sure that the Indian smartphone manufacturing play whatever tie-ups that you're doing with Chinese companies to vertically integrate, increase margins, improve, because the PLI is going out. Viewers of Thinkers Frequency would remember, right? The PLI, production linked incentive scheme, is going out for the smartphone industry. So now Dixon, as a move to counter the rising prices which will come, they have started tying up, started making joint ventures with companies so that they can vertically integrate themselves. Vertical integration, I'll just clear it out for the viewers if somebody doesn't know. And if somebody knows it and says, no, this is not necessary, this is just too basic, let me know, I'll stop. But vertical integration is something like, let's say if I make chocolates, okay, or let's say if I make noodles and I cook noodles, right? But then what I start doing is I start manufacturing the noodles as well, because I am doing a lot of noodle selling. I'm making noodles in the kitchen, but then I also start creating noodles by fresh produce. So then I don't have to give the margin to the person who was supplying me noodles, right? So my margins get saved a little because I've incurred that production cost, and now I'm going to produce noodles in-house instead of buying them off the shelf. That's called vertical integration. So that's what these people are trying. But the government is saying we're going to scrutinize this because it's not just smartphones. Medical equipment is also looking at that particular play. You know, people are saying that China, we import a lot of MRI machines from China and these kinds of machines, so medical equipment machines. So India imports 18% of its medical supply machines come from US, and then 16% from China, right? And they say this is a huge security risk because if these Chinese machines are taking away some sort of data, they know what Indian health profiles are, and without firing a single bullet, they can really cause a lot of harm. And that particular bit, like 16-14% of China, it's not counting the rerouting of Chinese products which happens from other countries. So you can imagine the maximum imports happen from China, and they're saying that it's a security risk. And we talked about this, right? China, we get 90% of our APIs, active pharmaceutical ingredients, from China. So of course it's a security risk. Who doesn't know that? But can we do a lot about it? That's a concern. NATO wants India, China, Brazil of sanctions because of the whole thing I told you, right? The Russian oil thing. Moving on. HDFC is issuing bonus shares. Things look good. Equity fund launches lose zip with the market. Okay. Equities are looking a little overvalued. Suddenly the sentiment around Indian equities has gotten slightly, let's say, what is the word? It's gone slightly lukewarm. And you know why, right? You know why? Because a lot of Indian companies, like a $280 billion industry, is getting stressed. So you can expect what happens, right? Speaking of a very, very interesting topic, it's very funny, okay? So you get the humor on it, okay? So they say asset managers offer a better play on market than brokers and exchanges, okay? So they say that investors looking to bet on India's thriving capital markets would be better off buying shares of asset managers rather than exchanges and brokers. And who says that? Who says that? This has been said by Mahesh Patil, CIO of Aditya Birla Sun Life Asset Management Company. So you get the joke? You get the joke. Asset management companies are better investments than brokers and exchanges if you're looking at capital markets, says the asset management company. So like, hey, we are better than these people if you're looking at investing. We've done better for some time. You can invest in us. Would you look at that pitch and be like, yeah, that's convincing. I'm convinced. I like this. Would you say that? I'll not. Even if it makes sense, it's funny. Steel firms to reflect gains from price hikes and cheaper coking oil. Coking oil is a raw material used in steel manufacturing. Its price has gone down 2%, better margins. These things highly depend on the raw materials and everything. A slight play in the raw material biz really changes the industry's outlook. So the stocks will be fine. Highly unlikely to fire Fed cheap, says Mr. Trump. He says, I'm not going to fire Fed cheap, even though I should, and even though everyone says I should. Mr. Trump had called Jeremy Powell, the Fed chief, and I quote, a moron in a few days ago. Because why? Because Mr. Powell wasn't really reducing the interest rates, and U.S. economy really needed that interest rate push. The US economy really needed that interest rate push. They said that we want to grow, inflation is in control, job numbers are good, economy is booming, a lot of investments are starting to happen, manufacturing is kicking in. We need the interest rate decline to be able to spur the new growth, right? However, Powell said no, and Mr. Trump called him whatever he called him. Speaking of Mr. Trump, the whole tariff thing is really working. He says 200% tariffs on pharmaceuticals imports, 50% tariffs on copper, and then tariffs on semiconductors as well. The chip thing. So why? He says, I'm going to start with some tariffs as far as pharma players are considered, maybe 50%. I'll give them a year to start manufacturing in US itself, and then the tariffs will be really high. And some companies have already started looking at that. So, got to appreciate it. Everybody said it won't work. Tariffs won't work. Everybody said tariffs won't work. Tariffs are a bad idea. All economists, all pundits, all US players, and so on and so forth. Everybody said that, but essentially, they worked. They're working. Basically, everybody wanted status quo. Everybody wants business as usual, right? Nobody wants disruptions. Nobody wants unpredictable things. Nobody wants change, because people who are making money in the usual way, they're very happy to make money the usual way, right? But you've got to give it to Mr. Trump on this. Moving on, dialysis chain Nephroplus is eyeing a 2,000 crore IPO. I'm not surprised. Moving on. Gold gains on softer dollar. US PPI in focus. Gold is really on a swing right now, right? Okay. TCS employees on edge as company's new benching policy completes first cycle. So this is yet again another proof, if you needed, about the stress that IT industry is going through and will probably keep going through in times to come. So bench used to be a very big play for the IT services industry. Now the benching policy is getting changed because of the rising pressures, rising AI pressures and so on and so forth. So policy restricts staff to just 35 annual days on bench after they risk getting fired and career degrowth and so on and so forth, right? So while HR projects placement, we also expect associates to proactively seek new assignments after completing existing ones. What you're seeing now is simply a more structured version of what's long been in practice, says the CEO of TCS. He doesn't want to sound the alarm bells, but everybody knows it, right? Indian IT's wanted bench strength is fast becoming a liability as AI led productivity gains have made entry level engineers difficult to redeploy. Big changes afoot. So, this is happening right now here, but viewers of Thinkers Frequency are like 50 days ahead of it, right? 50 days ahead at least. 53rd day, 53rd episode, and we've been talking about this since the very beginning, right? So, things take time, but being ahead of the curve is always a good place, don't you think? Drop some comments on that. Moving on, Indians are pouring into crypto. We are not surprised. Tech M's Q1 profit up 34%. Q1 profit 34% up. Revenue rises 2.7%. What does this news mean? How do you read this particular news? Profit rising 34%, but revenue rising 2.7%. It means that the employees, the workers of that particular company, Tech Mahindra, will be looking at some sort of difficulties, right? Because the gains are coming at the cost of, or let's say gains are coming because of more efficient processes, right? Which is obviously a bad news for people who are getting hired there, right? Moving on, free AI training for 5.5 lakh village entrepreneurs, says Mr. Ashwini Vaishnav. So that doesn't sound like a bad idea, but this sounds like one of those things, right? One of those things. Anyway, government to train 10 lakh people in advanced digital tech, says IT Minister Ashwini Vaishnav. So now this has to be read in context, right? If you read, if viewers of Thinkers Frequency would know that India has a major skill gap where 52% of people have, just primary education, and only 20% or 10% people have secondary education. So, right, if the baseline education play is so low, how do you expect people to have some sort of literacy as far as AI or things like that are considered? However, it's necessary, the vision is strong, and thoughts become things. So if they are thinking in this direction, it's a good thing. Wipro looking to become a consulting-led AI-powered company, says Mr. Richard Premji. Of course. Where's the surprise there? No surprise. Every tech services company, every IT services company will try to position itself as an AI company. If it doesn't get acquired by an AI company, that is. Because viewers of Thinkers Frequency would know that AI companies are looking at acquiring Indian IT services companies to rapidly scale the adoption, because then they'll get access to all clients of these IT services companies, the processes of the IT services company, everything, and then they'll be rapidly scaling the AI translation. Moving on, VC firms warming up to quick fashion delivery startups. Why? Because maybe quick fashion delivery, getting that kurta in 10 minutes is very, very important. It's very important. Didn't you know, folks, that there are a lot of problems in this world and in this country? But the biggest problem in this country right now is that I need to get that kurta in 20 minutes. Don't you think that? Like, the smart VC guys are saying, don't you believe that? Aren't you smart enough? We need that kurta emergency. That kurta emergency needs to get solved in 30 minutes. It's a lot of money flowing into those companies. Good for them. Moving on. A lot of geopolitical chit chatter. Iran, Israel, Russia, so on and so forth. Syria. A lot of action. NTPC and NLC are getting green lights to invest 27,000 crores in green energy. Now, green energy is essentially the thing. However, if you remember, we talked about thermal energy having not gotten the fillip that it was planned. Like 69% growth they were looking at in, let's say, 5 or 7 years, and only 5 or 7% happened, right? So Now, thermal power plants are going to get investments of 2.3 lakh crores in the next 3 years. That's like roughly $30 billion. $30 billion of worth investment is going to go towards thermal power. Because that's what we thought about, right? Now, viewers of Thinkers Frequency, again, when you're focusing too much on the green energy bit, which is important, obviously, the refining capacity, that wasn't growing, right? So now you're going to see a shift which is slightly more, let's say, egalitarian. So you're gonna see a lot of investments in green energy, but to manage the base power load situation, you'll also see some happening towards thermal, which is not bad at all. But the green energy thing is actually pretty solid. The whole nuclear power play, where they were inspecting the old and retired thermal plants to repurpose them as nuclear. That's amazing. Let's see what happens there. Center may seek details on missing auto PLI claims. So Center had parked a few thousand crores. How much was it? 25,000 crores Center had parked, but almost like many players, they didn't take those incentives. So 50 beneficiaries who are yet to submit any incentive claims. So government is confused, like, why are you guys not taking these incentive gains, But because if there is an incentive and the corporates are still not taking it, that means you've got to change something. Otherwise, nothing would happen. You parked some money and it's just going to sit there, right? So at this moment, we are trying to figure out what changed since the scheme launched. Some intended beneficiaries have cited supply chain constraints, according to people. PLI auto scheme was approved in September 21 with 25,000 crore. Incentives were to be dispersed for meeting incremental production goals, and the norms are stringent. And 5 OEMs have raised claims totaling more than 2,000 crores for FY25. So this is tepid response, and the government wants to figure out that we've got to just quickly do something so that these people avail these schemes so that we can grow faster. Delhi updates solar energy policy, trebles subsidy. Delhi is looking at solar play, treble subsidy. Good news for everybody. Trademark rules to recast books. Okay, we've read this, it's not important. Moving on. Global tenants steer warehousing towards path to sustainability. Now, a lot of it, where you're looking at energy, where you're looking at highway construction, you're looking at steel manufacturing, looking at the green play, a lot of it is just the incentives, right? Because now it's cheaper. The EV thing, the EV adoption, now it's becoming a bit cheaper because of all the incentives that the government is pushing in. And one of those beneficiaries of that investment is the warehousing tech. Indian greenhouse warehousing stock to quadruple by 2030. This is very, very important because, as we've discussed, viewers of Thinkers Frequency would know, number one, road has the answers to everything, right? Better roads lead to everything. Better roads lead to better logistical outcomes. Indian government is looking at reducing the logistics spend as a percentage of GDP to 9%. Earlier it was some 13 to 15%. It's come down to 10%, and they want to reduce it further to 9%. They want to reduce the logistics spend per GDP to 9%. Which is huge. Like, India is a $4 trillion economy. 1% of 4 trillion is how much? 1% of 4 trillion. 10% is 400 billion. 1% is $40 billion of saving. So $40 billion they're looking at saving because of efficiencies, right? What comes next in the logistics play? Road solves the problem, the warehousing play, right? And that's where the next focus is. Containers and so on and so forth. Green certifications, energy efficient architecture, advanced water management system, sustainability, and it's all getting incentivized. It's going to be cheaper to make these places, maintain these places, which is why these people are looking at it. Moving on. Glenn's 2030 mark focuses on novel drugs, 70% branded portfolio. So Glenmark Pharma, which is an Indian play, is looking at pivoting to a sharper, innovative drug discovery-driven company in the next 4-5 years. Basically, Glenmark 3.0 will be looking at bulking up its branded portfolio to 70%, says the chief. It's a move, right? India wants to be away because let's say if US has tariffs on imports of generic products or whatever that means, where does the pharma value lie, right? The maximum pharma value lies in drug discovery, in innovation, and so on and so forth. Because right now, viewers of Thinkers Frequency would know that US has like 50% share of drug discovery, which has come down a little. China's drug discovery share is at 30% or 28%, 35%, something of that sort, right? 28 to 35%, which is huge. So 28%, but India's share is at 2%. So that is not great. That is not great at all, right? So what they are looking at is like, okay, generic drug manufacturing, which is like a, like a volume play, is okay, it's fine. However, you've got to look at slightly more moving up the value chain, which hasn't happened as of now. So that's why a lot of companies are looking at new drug discovery platforms and so on and so forth, which is going to lead to better outcomes, higher innovative value outcomes for the Indian industry. And that is pretty much what I have for you today, folks. I hope I'm not missing anything. We are basically covered for the day. Just let me check. We still have 5 minutes with us, so that's good that we finished early. A lot of political chit chat, which I just chose to ignore. Did I do well with that? But I did something wrong today, right? Sorry about that, folks. Yeah, we covered pretty much everything, man. Yeah. Ford is basically recalling a lot of vehicles, some 7 lakh or such vehicles. Yeah, 7,700,000. They're gonna take a $570 million hit. My God, US Auto is in trouble, man. US Auto is really in a big trouble, and whoever who's winning, we know who's winning. China is winning. I am reading from Economic Times. I'm just checking if I'm not missing anything. So I have a few sources: N-Tracker, Economic Times, and other people that I watch. So I just bring it all together, but the staple is an Economic Times. Hey, what do you think is the future of this country, and will you stay in India or will you leave in future? No, I'm not leaving, Mr. Kondhalkar. I'm not leaving. I'm a pretty patriotic person that way. I want to contribute something. I want to build something of value here in India, help people here. So I'm not leaving. I've had opportunities to leave, and leaving is very easy. But I'd rather want to do something here. It's a foolish decision for me personally, because moving out is a much easier play. But this is my home. Which also brings me to a movie, a very good movie called Blood Diamond. Right? If you've watched Blood Diamond, Leonardo DiCaprio, great movie, one of his best movies actually, probably his best movie, if not his, like, almost top 5 easily. Right? Where he says, "This is Africa," I'm inspired by that kind of cinema. So and that's why quality is better in print from the electronic media. Yes, Mr. Tushar Tiwari, you're absolutely right. So once you have like a base, let's say you have Mint, I mean the Financial Express, Economic Times, you cover everything. You don't want to miss out on anything. You just don't want to keep hammering on one particular point, right? If you're digitally inclined, what you do is you create a filter bubble and you read whatever you like reading, and you'll read a lot of it, and you miss out everything else. Let's say we would never discuss something like a VRRR, right? We would never talk about a VRRR, RBI doing a bond buyback, and a VRRR to maintain liquidity adjustment facility, and so on and so forth, right? We would never talk about WACR rates, weighted average call rates, and so on, because that's difficult stuff. That's not interesting. If we just stick to the internet bubble, we'll just keep reading what we like reading, and then not read anything else. So that's why I think newspapers are the greatest inventions, because they cover sort of everything. They try to cover everything, and which is what I also try here at Thinkers Frequency, that I just don't want to leave out anything by chance, that maybe we didn't get a holistic picture, because as Leonardo da Vinci once said, everything connects to everything else, right? Everything connects to everything else. Like you wouldn't imagine something happening in, let's say, finance, or something happening in manufacturing, and that affects something very, very vaguely connected. So gold still king gives royal returns. Yeah, I've pretty much covered everything. Now you know. Yeah, so that's pretty much it, folks. The 53rd episode of Thinkers Frequency. Great, 20 minutes average view duration. Amazing. Thank you so much for joining, Mr. Tiwari, Mr. Amritraj, Mr. Kondhalkar, everybody on LinkedIn. It was lovely talking to you all. And I hope you had a lot of fun. I had fun, as I always do. This is a great start for the morning. Hey, yesterday you talked about nudify apps, how it'll nudify its effects in the long term by itself. But don't you think it looks good on paper than in reality? Asked Mr. Vamshi Krishna. Sir, what do you mean? I mean, do you think my theory, my hypothesis, is looking good on paper than in reality? That's what you mean? That it's just a good thought, but it might not translate into reality? Is that what you mean? Please clarify. But yeah, so I was doing that last bit I do, right? That, yes, okay. So, Mr. Vamshi, you might just be right, maybe. But I think in first principles. So, when I'm thinking that a Nudify app, ubiquity of everything, basically nullifies the shock value. In politics, it's called Overton window, right? If a politician starts abusing people, it becomes a very big deal when he does it for the first time. When he says something like, "Oh, I like Hitler," let's say, right? And obviously that's too far on the spectrum. But let's say if he says he's an idiot, Trump saying that Powell is a moron, right? That's too outrageous when he says it for the first time. But when he says it again and again, and when everybody starts adjusting to it, it's called Overton window in politics, right? So cuss words or abuses or everything sort of self-adjust. The people's response self-adjusts to that kind of activity. Protests, you realize protests were huge, right? Just 6 years ago, Black Lives Matters and farm protest and everything, all sorts of protests, they used to look very real. People used to be like, oh my god, this is real. But then, people have started getting desensitized by protest, and people have started realizing that these protests are paid and so on and so forth, and we don't trust them. And so people's sort of reaction adjusts to reality and the ubiquity of it. So when I said that Nudify apps and ubiquity of them will basically be self-correcting in nature, I certainly believe so. Right now, it's a big problem if somebody leaks somebody's nudes, right? But just think about it 3 years later, that you're a parent and in your class somebody leaks somebody's nudes and they get circulated, but then everybody's like, this is AI. The person says this is AI, screw you, this is AI. That's it, right? And everybody's desensitized to that particular thing. That's what I believe is a logical thing to happen. I believe that's a possibility. However, we've never seen the future, and the best we can do is predict it. So that's what I predicted. I might be wrong, and if I'm wrong, I'll apologize. But conceptually, I think it makes sense. Let me know what your thoughts are. So it's 9-3, uh, uh, the daily mental workout, the daily dose of insights and analysis which don't lead to paralysis right before we punch in, right before we start our day, has come to an end. I hope you have a beautiful day personally and professionally, and I'll see you tomorrow, same place, same time, hopefully. Mr. Vamshi Krishna asks, it causes mental trauma for that person in the long term. But how would it cause mental trauma in the long term or in the short term if everybody just agrees that it's AI? You're confusing present. If it happens right now, it's gonna be a bit of a problem, right? If it happens right now, people are not desensitized to it enough. But think about it happening long in the future, like 3 years. That's what I said yesterday, right? It's gonna be self-correcting in a few years. I didn't say like if it happens 3 months, you know, it's not gonna have that shock value. But that shock value over time will reduce, and then we'll just be free of that particular trauma that people in the previous generations have had to go through because of some bad elements, right? And that could be a very big self correcting thing, don't you think? Okay, got it. Thanks. Perfect. This was a beautiful episode. I love it. I always love it. This is great. This is awesome. As we discussed in one of the episodes, that I saw an Auntie G doing a live stream, and she had like hundreds of people. We only have like 10 people at any time. And what she was doing was essentially she was wearing a very revealing outfit, and she was saying like करें इसको share करें like करें share करें इसको like करें. I can't say that, but I'm inspired. So see you tomorrow. You get the clue, right? Don't make me beg for it. Bye bye.